What if you could tell whether a stock is overvalued or a bargain in under 5 minutes? Today I'll show you the exact method I use to analyze stocks step by step. There are over 10,000 stocks in the market. So how do investors actually decide which ones to buy? Some investors rely entirely on charts. Others spend hours reading financial reports. But after years of researching companies, I realized something important. The best investors usually combine two things: strong fundamentals and market momentum. So in this video, I'm going to show you the exact workflow I use to analyze stocks. This includes fast graphs for evaluating company fundamentals, TradingView for understanding market trends, and AI tools like ChatGPT, Google Gemini, and Perplexity AI to analyze earnings reports and financial statements much faster. And at the end of this video, I'll also show you 3 major red flags that instantly stop me from buying a stock. Let's start with the first step, fundamentals. When I analyze a stock, the very first thing I check is the company's fundamentals. Because when you buy a stock, you're actually buying a piece of a business. And if the business isn't strong, the stock usually won't perform well in the long run. To evaluate fundamentals quickly, I use a tool called Fast Graphs. Fast Graphs is useful because it visually shows the relationship between earnings growth, valuation, and stock price. And over long periods of time, stock prices tend to follow earnings growth. But sometimes, the stock price moves far away from the underlying fundamentals. And that's where opportunities and risks can appear. A good example of this is Adobe. Adobe has been a very strong business for many years. The company has consistently grown its earnings. But there were periods when the stock price increased much faster than the company's earnings growth. When that happens, the stock can become overvalued. Eventually, the price often moves back toward the company's normal valuation. And recently, Adobe's stock price has actually fallen below its historical PE ratio. You can clearly see this when the price line drops below the earnings valuation line on fast graphs. But this is extremely important to understand. Just because a stock looks undervalued does not automatically mean it's a good investment. Sometimes the market is pricing in real risks. For example, slowing growth, increased competition, industry disruption, or changing investor sentiment. So when I see a stock that appears undervalued, I don't treat it as a buy signal. I treat it as a starting point for deeper research. The goal of this step is simple. Find companies with strong fundamentals that deserve a closer look. Once a stock passes the fundamentals check, the next thing I analyze is the trend. For this, I use TradingView. Because even great companies can go through long periods where the stock price declines. And buying during a strong downtrend can be extremely frustrating for investors. So when I open a chart, I ask a few simple questions. Is the stock in an uptrend or a downtrend? Is the price making higher highs and higher lows? And is the stock trading above key moving averages? Personally, I prefer buying stocks that are already showing signs of strength. That doesn't mean I'm day trading. Instead, I use market trends as a timing tool. The goal is simple: find great companies and try to buy them when market momentum is positive. Once a company passes both the fundamental check and the trend check, I move on to deeper research. This means reviewing things like quarterly earnings reports, annual reports, financial statements, and management commentary. But here's the problem. These reports can sometimes be hundreds of pages long. So to speed up the research process, I use AI tools. Tools like ChatGPT, Google Gemini, and Perplexity AI. These tools are incredibly helpful for summarizing complex financial documents. For example, I might ask questions like, what are the biggest risks mentioned in this earnings report? What changed compared to the previous quarter? Is revenue growth accelerating or slowing down? And what are analysts most concerned about? AI tools can highlight important insights much faster than reading every page manually. Of course, I still verify the most important information myself. But AI makes the research process far more efficient. Now, Even if a company passes all of these steps, there are still three major red flags that can immediately stop me from investing. Red flag number one, declining revenue. If a company's revenue is consistently falling, it may mean the business is losing demand or facing stronger competition. Strong companies usually show stable or growing revenue over time. Red flag number two, excessive debt. Too much debt can be extremely dangerous, especially when interest rates rise or the economy slows down. Highly leveraged companies often struggle during economic downturns. Red flag number three, a broken business model. Sometimes the biggest risk is that the entire industry is changing. New technology, new competitors, or shifting consumer behavior can quickly make a business model obsolete. So if I see structural risks to the business, I usually stay away. So to summarize, my stock analysis process looks like this. Step 1. Check the company's fundamentals using fast graphs. Step 2. Analyze the stock's trend using TradingView. Step 3. Review financial reports using AI tools like ChatGPT, Google Gemini, and Perplexity AI. And finally, always check for major red flags before making an investment decision. Because investing isn't about finding perfect stocks, it's about building a repeatable research process. The more disciplined your process is, the better your long-term results tend to be. This is the workflow I personally use when analyzing potential investments. If you found this video helpful, consider subscribing for more content about investing, stock research, and building long-term wealth. And if there's a stock you'd like me to analyze, leave a comment below and I may cover it in a future video. Thanks for watching, and I'll see you in the next video.